All right, folks, in today's real estate update, we're going to ask the simple question, is this the panic before the crash? I'm going to show you guys some of the data. We're going to talk about this whole situation and how it's going to impact you, whether you're a first-time home buyer like me, whether you're looking to become a real estate investor like me, or whether you're already a seasoned veteran in the game as a property owner and potentially a real estate investor. But full breakdown here in the real estate asset class, one that I'm watching closely and getting ready to move on in a major way. Starting off here, we have a post here from Peter Schiff. More bad news for homeowners, renters, the housing market, and the entire U.S. economy. For many, insurance policies will be much more expensive to buy and harder to get. This is one of the negative impacts that's going to be coming here on the real estate market as home insurers cut natural disasters from policy as climate risks grow. Now, you know that they love to blame that climate crisis, that climate change. Boy, is it getting us. And, up here in the Pacific Northwest, it's been treating us pretty fantastic. No complaints up here, but definitely have my sympathies going out for Maui, going out for the BC wildfires. Even had one of the largest fires ever there in Europe, or Greece, I should say, too. Big time natural disasters taking place. And as always, they have that problem, reaction, solution. Order out of chaos is the motto that they live by. But this is going to impact so many people, everyone, whether you own, whether you rent, because premiums are going to go up, right? And prices are going to be coming down because you're going to have to put more money towards your insurance, right? So this is just another negative factor that's going to be coming in on the real estate asset class. This is interesting to watch as California has been devastated by wildfires. Then they just had, the first time in 80 years that a hurricane hit California. Obviously, we have situations, hurricanes down in the south in Florida, where, some insurance companies are completely pulling out of the Florida market and other places as well. So something to watch. Now, Lance Lambert says, we just witnessed the fastest ever deterioration in the U.S. housing affordability. That'll happen when national home prices spike 40% in just over 2 years from 2020 to 2022 was the real estate mania, right? Artificially pumped real estate, of course, followed by a historic mortgage rate shock, 3% to 7%. We're actually up about 7.5%, and we could see some mortgage rates coming in well over 8%, actually. We could see that average tick up to about 8%. In fact, I was just watching the Real Estate Ninja, shout out to Travis. He was actually predicting that mortgage rates, the average U.S. mortgage rate, was going to go to 10% before we come back down, before we ease up. And so that's a very interesting prediction, something to watch for sure. But as we can see on this chart right here, drivers of housing affordability, according to the Federal Reserve Bank of Atlanta, you got the income component, and then you have the house price component and the mortgage rate component. All these factors leading us to the fastest ever deterioration. And now we have housing affordability at the worst ever. Moving over to the Kobesi letter, they say mortgage payment to income ratios are now pushing as high as 40%. Now, this is the average. In some scenarios, folks are well up. About half of their income is going towards their mortgage payment. And then what's worse is it's, even the same case for a lot of renters, right? Where 40 to 50% of your mortgage or your rent payment 40 or 50% of your income is going towards your mortgage or rent payment. That is not good. You have no room to invest after that, right? This is above the 2008 peak of about 34% and by far the highest level in history. It is now nearly 1.7 times more expensive to buy a home than to rent. The problem is that supply is scarce and higher rates are only worsening that issue. As rates rise, supply is falling and new home buyers are bearing the cost. It could be years before we see any sort of relief if the Fed keeps rate higher for longer. Would you buy a home in this market? Now, let me know, because what I'm seeing in my market, and I put this tweet out over the weekend, I asked, are you guys seeing this as well, where I'm seeing the same properties listed for rent, the same ones that are also listed for sale? And it's way less per month to rent these houses, right? These houses are renting for $3,000 to $3,500 per month, and to buy them at a $700,000 cost, to buy, you're at basically a $4,000 a month payment, upwards of $4,500, right? So it's costing you way more to buy the house than it is to rent. And I'm seeing the same houses that, for whatever reason, they can't sell them. So they simultaneously have them listed for rent as well. Or I'm seeing where they're pulling the listing for sale and now they're trying to rent out. I just came across another property here today. They started out they bought the house in 2022 and they bought it for, I think it was $700,000, which, based off of that, the math, they're anywhere probably from, probably depending on their rate, they could be anywhere from about $3,500 upwards of $4,500 per month, per month on their mortgage payment, right? Depending on how much they put down. And they tried to rent this place out for about $6,000 a month. They dropped it down to $5,500, down to $5,000, and now they have it listed for $4,500. And it's a waterfront property. It's actually in that area, in that harbor. It's the largest dock slip on the harbor. And I don't have a boat, and it's not XRP yacht season yet, but I was looking at it, I was like, dang, $4,500 a month. Got the largest boat slip here, and it's just dreaming of XRP yacht party time, But I'm seeing a lot of properties like this where, this is a recently purchased property and they're just continually declining what they're asking for rent. I'm seeing the price cuts on the listings coming in my area as well. So let me know, what are you guys seeing in your areas as well? Are you seeing the same thing that I'm seeing, where you're seeing properties that, they're pulling the listing for sale, now they've got it for rent, they keep on consistently dropping prices? This is my area, so it's, going to be different from where you live, but I'm noticing a trend here where as this housing affordability goes up, more and more properties, cutting prices, and then less properties coming available. So this is the perfect dynamic where we actually see house prices actually go up, which I'm about to cover in the last segment. Before I do, I want to show you guys this one. Real estate industry in panic mode. So we asked the question, right? Is this the panic before the crash? Well, the industry is in panic mode, as I was noting, because we have a 45% drop in home purchases, bigger than 2008. Home sales are now down 31% in 2023. People have the golden handcuffs, right? Not in regards to their job, but this in regards to their house, right? Their 2 or 3% mortgage interest rate. Without transactions, many jobs that are commission-oriented are seeing huge declines in incomes. Real estate agents, mortgage brokers, title insurance, home inspectors, all of the various categories are entering a depression from lack of transactions. So this is the point that I wanted to make for you guys to answer the question. Is this the panic before the crash? Well, this is the panic, and it will be a crash depending on who you are and what your perspective is. Now, what am I talking about? Well, if you're in the industry, if you're an agent, mortgage broker, title insurance, home inspector, you're in trouble right now, right? This is a panic, and they're trying to play it off cool. And what's the pitch? Buy now, refinance later. Don't worry. Buy now, refinance later, which I love how real estate brokers can give you that type of financial advice. But God forbid, I share my opinion here on YouTube, right? Everybody comes at me. Are you trying to give me financial advice? No, I'm not. I'm just explaining how I look at these things and how I invest my money. But these real estate agents, they're happy to tell you to buy now and refinance later, pitching you that financial advice. So interesting to me. But nonetheless, we're seeing the industry in panic, and we're seeing some sectors, some segments of the real estate industry and some cities that are going to experience a crash. Not all markets are created equal. And I wanted to read off this little piece here by Ryan Stewman. Someone who says he claims that he has 8 figures in real estate holdings and close to 9 figures if you do internet math and count the syndications that I'm a part of. He says that he's been in the real estate game full time since 2004, and I'm going to share his perspective right here. Started off as a loan officer, became a mortgage broker, as well as a prolific real estate investor. But I don't really care about all this. He says, in the real estate business, there are 2 mammoth powerhouses who have access and control over the most data. Those 2 companies are Zillow and CoreLogic. When Zillow or CoreLogic puts out a report, I read them and know they are from a place of massive data and information. This is interesting right here. This report was put out, I think, within the last week. According to Zillow, the United States housing market will see an average overall increase of 6.8% through 2024. What does that mean? That means that prices of houses are expected to rise, not decline anytime soon. Most people who own homes either refinanced or bought in the 2020 to 2021 timeframe. The interest rates on homeowners from those years are low, and even if they sold the home they own, it would now cost more for less of a home due to higher interest rates. 200% increase. This means less homes for sale, period. And this is the problem. Depending on how you look at it, this is why prices are set to increase. You'd have to burn my house down for me to leave a 2.8% interest rate. And this is the case for so many folks, right? They're living high on the hog. He says, I pay less for my McMansion each month than people pay for rent apartments around here, right? So he's paying less on his mortgage payment for his McMansion than people are paying for renting their apartment in the same area. So housing is expected to increase 6.8% across the board. This is a general statement, guys, 6.8% across the board. But that is a foolish statement. Let's break it down a little bit. 6.8% is an average across America. That may mean that Dayton, Ohio goes up 4%, while Frisco, Texas goes up 14%. If you're in a busy area, 6.8% is the minimum increase. I say all of that to say this. The cost of owning a home is only getting higher. On the other hand, my man Jay Powell just said he will continue to raise interest rates to tame inflation. Let me explain in simple terms how the Fed works. We don't need that explanation. What we understand is that the Fed is going to potentially raise rates one more time this year, and this is only going to make it more costly. The housing affordability is going to go down. If Jay Powell is going to raise rates and Zillow says housing prices go up 6.8%, that means only one thing. Right now is the time to buy what you can buy in real estate. It's not getting cheaper, and waiting only costs you more money in the future. With inflation, what you qualify for today, you won't be able to next year. The best time to buy a home was in 2021. That will not happen again, which means the second best time to buy a home is right now. The facts are the facts, folks. It's a good investment and only going up. Rise above with the U.S. flag, right? Now, I understand there's many people like this that are basically just, looking at this scenario and they're seeing the same thing that I'm seeing, which is in good neighborhoods, quality schools, where a lack of new construction is taking place. Yes, you are going to see home prices actually go up. 6.8% is going to be the average, right? So like he says, in Frisco, Dallas, Fort Worth area, that metro has been booming. You can see it go up in some of these areas that are absolutely booming. But this is not, like I said, not all markets are created equal. So when we're talking about commercial real estate, we're talking about office space, you are going to see that get absolutely killed, right? So commercial property, some segments of the real estate asset class, like Airbnbs, are being banned in some cities. So some of these segments are dying out. They are going to experience a crash. Some of these folks in the industry are going to have to quit. They are going to have to move to something else. They are going to have to pivot, right? And then to the point too, like he was saying, if you can't afford it now, you're not going to be able to afford it next year. The other thing to consider is the recession that we've now entered, right? So this is going to be another impact on the real estate prices as well. So if you're in a city that doesn't have a strong, robust, diverse jobs market, then that could be another potential catalyst to bring your prices down, right? So this really is a location by location basis. We cannot say that the real estate market is going to crash across the board. In fact, in some areas, I think that's going to sustain just fine, and prices are going to go up. I do share the same sentiment, but you have to understand, it's all a matter of what segment of real estate are we talking about? Which city are we talking about? What state are we talking about? We still have some states that are having migration outflows, right? So when it comes to the real estate asset class, is this panic for some? Yes. Is this going to be a crash for some? Yes. For us, I want us to understand how we're positioned and how we need to move going forward to be successful in the real estate asset class. In a separate video, I'll be breaking down why real estate is one of the pillars of building wealth for so many, and how I'm going to be moving in the real estate asset class. And if you're looking to, basically talk with me and my community on how we are moving into the real estate asset class, you can do so by going to my website, zachrector.com, and joining our Discord group. That is where I explain on a more in-depth, intimate level how I am looking at these deals, okay? And so if you're looking to get tapped in, just go to my website, zachrector.com. At the end of the day, I want folks to be prepared for this. Whether you're in the real estate industry, whether you're looking to buy your first home, whether you're looking to become a real estate investor, we need to have a plan and we need to execute, because right now is going to be one of the best opportunities, I believe, for those who are prepared. This is going to be panic. This is going to be crash for many who have been, drinking the hopium and just begging Jerome Powell to save them when Jerome Powell's not coming to save us. Jerome Powell is coming to sacrifice us. And when you change your mindset and you understand that, then you can start to find the opportunities, and then you can also take the appropriate measures to protect your wealth as well. So get tapped in by going to my website, zachrector.com. If you appreciate this real estate updates, make sure we smash that thumbs up on the way out, and I will see you guys in the next one. God bless you all.